Another day in which the market started up and finished down significantly. The NASDAQ finished down 1.15%. The S&P finished down almost 0.6%. Now, guys, I want you to remember, the NASDAQ had the biggest run up and what I think is the most overvaluation, so it'll likely have the biggest fall. The Magnificent Seven are sitting there. Tesla had another down day. Nvidia had a down day, down over 10% from its all-time highs. And guys, crypto, Bitcoin hit $60,000 per coin today. Now, remember, I have to repeat this. Yes, I'm not a fan of crypto and Bitcoin, but I'm going to tell you right now, Bitcoin is not a hedge. It literally follows the NASDAQ almost exactly. Yes, the run-up over the last 6-9 months has been far greater for crypto, maybe the last few months for Bitcoin. But guys, it's basically going to go in tandem. And I think it's going to do worse than the NASDAQ. So you have the S&P, you have NASDAQ, and you have Bitcoin. This is the order of which I think they're going to do poorly. So then if the S&P loses 30%, I think the NASDAQ will lose 50%, and I think crypto will hopefully lose 100%. But we don't know if that's going to happen. Now, where do the markets go from here? I don't know. Anybody who tells you otherwise, you got to unsubscribe from them and stop listening to them. Which reminds me, this channel, Everything Money 24/7, is dedicated to news on a weekly basis, 3 to 5 videos a week, where we react to news, react to earnings, react to things that matter to you. So if you like this, subscribe to the channel and share this video with somebody you know. And the reason to also sub is next week is our kind of like our Super Bowl of earnings week. A lot of big companies, Tesla, Google, all these major companies are going to report next week, and we will be here to report on them either in the morning if they've reported before the bell or after hours. It'll be a busy week, and you're going to want to be able to hear these messages. Now, in my last market reaction video, we didn't really talk about this, but it's something I really want to discuss. Market valuations. I posted today on Twitter, and I'm very active on Twitter. On Twitter today, I posted, it's amazing to me that everybody worries so much about what's happening in the world. What's going to happen here? What's going to happen here? Is there a war? Is there not a war? What's the Fed doing, etc.? Guys, I think that's all frivolous, because the funny thing about the whole thing is the one thing everyone should care about, valuation, they don't. They care about who's declaring a war on whom. And I'm going to show you a chart here very shortly that's very interesting. But guys, in the long run, valuation is what matters 100%. Yes, in the short run, it can go crazy, it can be nuts, and it feels like it doesn't matter. The feeling of everything, you're going to have that FOMO. Oh my God, look at stocks going up. I got to get on that. We're here to teach you that, guys, there's always going to be a great stock to invest in the future. 3 years ago, you couldn't miss with Tesla. Look at Tesla now. It's down, I think, almost 70% from then. You couldn't miss on EVs 3 years ago. Guess how many of them went to zero in general? Tesla is one of the few that are remaining. Now it's Nvidia, AI. Guess what? That'll pass as well. And since 1900, we've had cars, we've had airplanes, we've had radios, we've had TVs, we've had color TVs, we have computers, we have internet, we have real estate, we have AI, we have EV, we have cannabis. All of these things ended up not mattering after a few years because all the crap companies will go to the side and the few leaders will win. And guys, the tech companies of back in the day are the blue chips of today. The super innovative tech today will be the blue chips of tomorrow. That's why we have this channel. I want to guide you on that process. And I'm sure that a lot of people watching right now are probably listening to this going, that actually makes sense. I'm not telling you need to think like me. What I'm telling you to do is sit there and listen to my perspective, and it sits with you and sits well, listen further. That's what happened with me. I got caught up in the dot-com boom 24 years ago, and I finally started hearing more about Warren Buffett. I'm like, that makes sense to me. Every investment is the present value of all future cash flow, and when I buy a stock, I'm buying a piece of a business. But at the end of the day, valuation matters, and let me show you that a little bit further. Guys, this is my stock market to GDP ratio that I created based on the S&P 500 going back to 1928 and the equivalent of it. All right. Now, with this, there's a lot of criticism. Well, we make money overseas. Got it. Criticize it all you want. At the end of the day, these things do matter. You can create one of these things relative to world GDP as well, and I'm sure it'll still say something similar. But right now, we're at a ratio of 1.8. Historical average is 0.94. We are 91% overvalued based on this metric. And for those of you who think this doesn't matter, I have another metric for you, the cyclically adjusted PE ratio. What that does is it takes the last 10 years of earnings, brings it to today, and divides the current price of the market by that. The average historically was 17, and currently It is at 33.34, 94.87% overvalued, even worse than the stock market GDP ratio that everyone criticizes, which, remember, Warren Buffett is the person who says that the 10-year cyclically adjusted PE ratio is the most reliable metric at any given time on where valuations stand. Is it possible Warren Buffett in his 92 years is wrong? Yeah, it's possible. Or is it more likely that it's not different this time? You probably know where I stand on that one. At the end of the day, when I buy an investment, my return is going to be based on two things: the price I pay and the future cash flows of that investment. I can usually only control one of those things. And the more I pay for that, the one thing I control, the less return I'm going to make. If I told you that I'm going to give you $10 a year for the rest of your life, if you paid me $1 million for that, you're going to lose money. If you pay me $1 for that, you're going to make a ton of money, a ton of return on your money. The $10 hasn't changed. What Microsoft does in the future is not going to be driven by what you perceive the price to be today. They're going to go handle their business the way they handle their business. And that cash flow is going to increase. Remember, when everybody thought Microsoft was dead, when it went from $50 in 2000 down to $11 or $12 in 09 and 10, guess what happened to their revenue and profit along that time? It just kept going up and up and up. Even when people said it was dead, the company wasn't dead, the stock was down, and news follows the stock price. One of the things I very much believe in is buying individual companies. However, I believe in running your future, looking at the future, what's going to happen, and buying based on an ETF. One of the best things we have in our software is we have this retirement calculator. And I use this retirement calculator personally once or twice a week. Don't worry about that. Most of the people in our community use it once or twice a year. It's a way to make sure you're on pace for what you need to do. Because at the end of the day, this is reality. These are all the emotional things we've gone through since 1950, whatever, since the Korean War. Look at all these things: Korean War, JFK killed, Cuban Missile Crisis, Vietnam War, Nixon resigned, stagflation, 18% mortgage rates, Black Monday, Gulf War, savings and loan crisis, Y2K, dot-com bubble, Croc War, September 11th, housing crisis, Brexit, COVID, and guess what? What about Reagan being assassination attempt right there? All these things have happened, every single one of these. And guess what? How many other things have happened along the way? Terrorist attacks? We only have one on here. How many terrorist attacks have there been in the last 50, 70 years? Give me a break. It's been so many. But guess what? The S&P keeps going and going. And by the way, this is a log scale. This doesn't even show. The real market, the real chart is like that. This is showing it skewed just to sit here and say, guys, you're going to buy based on fundamentals. But you're going to make your money by letting things run out, by keeping your emotions in check, not worrying about all these different things. By the way, Soviet Union collapses, if anything, that's probably helped the world. But I look at this saying, man, everybody gets so messed up with the emotion of it. We want to catch things. We don't want to miss out on things. But at the end of the day, you use your fundamentals to buy great investments. But you use your emotions to sit there and stay inside of them in these investments, be patient, and let them run on themselves and let them compound for a long time. Every great investor tells people to do that. Whether you're doing it with an ETF like SPY or VOO, or you're doing it with individual stocks. You can do it with both, or a portion or one and the other. Listen, I love buying individual stocks. I guarantee there's a time when I'm buying ETFs. And I'm sitting there saying, I love the stocks that I have. I don't really want to add to any of them, but S&P looks pretty good. Let me go buy some right now. QQQ looks good. Let me go buy some right now. Because I do believe that the QQQ is a great way to get into tech companies without having to worry about which one's the best one. However, I believe in doing that when QQQ has fallen more. SPY, just keep buying it month in and month out. You don't know what's going to happen here, but if you bought all along the way, whether they're up or down, it did not matter. You kept going. And guess what, guys? If I told you right now, you should have bought when Nixon resigned, that would have been a great opportunity here. But during that time, people would have been screaming about why you should not buy, because news follows the stock prices, not the other way around. If stocks are up, here's the news. The news is going to report all the great news about the stock market. If stocks are down, here's all the news out there about why stocks suck. The time when S&P was most undervalued, 65% undervalued back in June of 1982. The next 10 years were 14.26% returns, not including dividends. What did we have then? We had 15% plus interest rates, and we had Barron's Magazine write an article called "The Death of," guess what it's for? Equities. Guys, the death of equities, the most undervalued time in history. And guess what? If you were around during those times, you probably felt that. Why? Because stocks were going nowhere. It was 16 years of the stock market going from 110 in the S&P to 107 over a 16-year period. Guys, guess what? I believe the next 10 or 15 years are going to be pretty bad. How bad? I don't know. But you can't pay these nosebleed prices. You can't pay 33 times the last 10 years' earnings and have it end up okay. Have I been wrong for 6 or 7 years? Yeah, but I think if you go 5, 10 years from now and compare it to 6 or 7 years ago, the returns are not going to be good. It's just very, very difficult. Peter Lynch said there's a 100% correlation between valuations and stock price in the long run. In the short run, anything can happen. We don't know what's going to happen in the short run. And anybody who says otherwise is absolutely wrong. One of the biggest YouTubers out there that I know, he told me when they started raising rates in 2022, by September, October of 2022, he said they're going to start raising rates again, lowering rates again in early 2023. How's that going? We're still at highs. And guess what? 4 months ago, everybody was banking on 6 or 7 rate cuts this year. What does it look like now? By the way, I don't know what's going to happen, but they're saying there's a chance rates even go higher this year. I have no idea what's going to happen. But if you want to be a good investor, you should want higher interest rates. Higher interest rates are good for fundamentally sound investors. And that's what I want you to become. So if you want to join the community, want to use our tools, want to become a better fundamental investor, as well as be able to use the emotions of the community to help you out. This community is sitting here. They want to sit here. They talk every single day about the emotions of the market. Today being a red day, everybody loves it. This being a red week, everybody loves it. Literally, people in there are cheering. If you want that kind of emotional stability where you actually cheer for red days, join the community. Click the link below. $7 for 7 days. We have a wait list coming in the next few weeks. So join now before that wait list gets enacted, because I'm going to be limiting the number of spaces every single day. I don't know how long the wait list will get, but the goal is to sit there and limit how many people join the community, because we want great members in this community who are going to sit there and engage. So guys, where do we go from here? All I know is whatever's going to happen is going to happen. Markets will do what they're going to do. We just don't know when. Unfortunately, markets are pretty exuberant right now. And I look at crypto. Crypto to me is now the poster child of this market. I used to think it was Tesla, but I look at this now saying Tesla's been hit pretty hard. 414 all-time high in the last 2.5 years, 2.5 years ago. And now it's at 155 or so. I don't even know where it finished today. That is a big drop. And by the way, since then, back here at 414, Tesla was doing $58 billion in revenue. It's now at $95 billion. You explain this to me. I have one word for you. Big word I want you to understand as to why that happened. Overvaluation. Now, you might sit there and say, wait a second, Paul. It was overvalued before then. I agree. But suddenly the market shifted. They didn't care about Tesla. They weren't getting the returns from Tesla. They got to go to their next thing. What's that next thing? Nvidia. For a long time, it was Apple. Then it was Tesla. Now it's Nvidia. Guys, there will be a time when I'm a buyer of Tesla and Nvidia. And can I tell you something right now? Here's a clue when it's going to be. When everybody hates them. And there will be a time when everybody hates them. You cannot find a time in history in which people loved every investment for a long time. So guys, I encourage you, follow our channel, click the link below if you want access to the community. If you're not ready for that, I get it completely, but there will be a time when you're ready and we're going to embrace you. If you want to see the 13 stocks that I do own, watch our next video. I'll see you in the community.